welcome to The Trade. Let's get you caught up on what traders are watching out there. Japan's economy contracting in the first quarter, squeezed by weaker private consumption and external demand, throwing a fresh challenge to policymakers as the central bank looks to lift interest rates away from near zero levels. Of course, we're waiting for Federal Reserve policymakers to see some renewed progress on inflation before reducing borrowing costs, but we did get some encouraging data with CPI easing more than expected in April. Escalation of the US-China trade war seeming unavoidable, whoever wins the White House in November, according to analysts. And we are also seeing Netflix saying that its ad-supported tier has reached 40 million global monthly active users from 5 million a year earlier, a sign that its push to attract new users with the cheaper plan is paying off. Well, for his take on the US CPI print, as well as the Aussie's reaction to today's job data, Nick Twidale, Chief Market Analyst at ATFX Australia, joins me in studio. Good to see you.
Thanks for having me.
Let's kick it off with Aussie then, because we did just have that jobs data. Always a little bit of a volatile series.
It is, yeah. So it was interesting, and once again, we've kind of got a bit of good and a bit of bad. So I think that the headline number came out a little bit stronger, expected at plus 22. I think it came out around 35,000. But then, of course, unemployment rates crept up a little bit more than expected. So I think we've just seen the Aussie sort of track a little bit lower. I still think, sadly for us in Australia, that the real move in the Aussie dollar is going to come on the back of what we see in the greenback over the next few days. But it's an interesting data print that we've got. I suppose we've got the chart sitting up here now. So it's interesting. This is a longer term daily chart I think we've got up. And we're on a pretty strong trend line or a pretty strong level of that trend line resistance. It's flirted with it this morning a few times.
Love a good flirt on a chart.
A little bit of a flirt, but because it's longer time, you need a decent break. And on the dailies, you probably want a decent few hours of that break to really sustain move. So interesting times for the Aussie. We could see it, especially if there's more downside for the dollar over the next few sessions, we could see it break into a new range. And there you go, that's the update on the Aussie now. So it has drifted off. I think it peaked at around about 67.14 earlier today. There is options interest, as there always is in the Aussie, around about the big figure. So we're probably going to see it sort of gravitate around that level over the next couple of hours, and then we'll see what London does when they come in. But it does feel after the CPI data that we're going to see a little bit more downside for the US dollar.
I want to have a look at the yen, because I think dollar yen just had a big move just in the last half hour or so.
Oh, really? Oh, so we probably want a live one. It has dipped hard. I think it's been under 154.
Down 0.6 of 1%. Can we get the daily chart, guys, that I put in there? Because I think it's just had a big move in terms of 0.6 of 1% move dollar yen, 153 we're seeing. But what are you seeing in terms of some of those moves?
That's interesting. Just looking at that. So that's the chart from only about an hour or two ago. So it's actually gone down to 153.60. So another 70 points on what we got there. Great result for the BOJ overnight, I think, with that CPI. And to me, that CPI number's not really come out drastically different from expectations, right? It's only 0.1 lower. But maybe you're starting to see the dollar yen coming in. Normally they wait for it to move higher before, but if there is a bit of, and that's not official action by any means, but giving it a tap when it's on its way down could get a much better result for the Japanese authorities than what they normally do, is wait for it to go sort of excessively high like it had done earlier this month. But that's an interesting move, because I mean that's clearly some big flow going through to take it 70 points this morning, having already done over 1% on the day after the CPI data. So that's pretty interesting. We would have had the Japanese fix this morning as well, so that could have contributed to that flow. But great thing for me, I suppose, is we're seeing some volatility in foreign exchange markets.
Exactly. This is going to keep you employed for at least another day or so, Nick.
Give me another day or two,
Let's have a look as well in terms of what we're seeing with euro dollar and some of the moves there. A lot of focus on the ECB going to be cutting before the Fed and the like.
Yeah, I think that's been talked about. And then, as you say, we're looking at the ECB to cut before the Fed, and euro's just gone and jumped sort of like a big figure overnight. So I think that's kind of my take at the moment on the CPI. We have had big moves. And I think there was a lot of fear in the markets that we were going to get another hot CPI number. And this has kind of been a relief rally in stocks initially, and a bit of a dip in the yields in the US, and some currencies, sort of like a relief rally for the currencies. But to me, I don't think it really changes the overall narrative yet for the Fed. It's obviously a step in the right direction. But for currency, we've got to trade what we're seeing. And as you can see from that chart, we've broken some good resistance levels and we're sort of sitting into new ranges. So I think on the longer term, you want to be taking into account what we get in the next few sessions into the New York close to see if we're going to see a sustained drop back in the dollar and we sort of change our mentality.
Yeah.
Or whether this is just a nice relief rally for stocks and a dip for the dollar because we were worried about a stronger CPI. And it's going to come down to when we do really see the Fed cutting rates. And at the moment, I think it's 85% priced in for September. But if we see, this could be the anomaly rather than the norm that we are seeing the inflation coming down in the US. And so being a bit contrarian, it's like, all we need is some stronger data out of the US again, and we're going to be back to buying dollars and looking for those levels. So I kind of want to see a little bit more data. I think the Fed wants to see a bit more data. Investors in the US, they're happy to jump on the bandwagon while the going's good. But interesting times, I think, across all the markets. So, fresh highs in stocks. And
never a dull moment. All right, they're going to keep you a little bit longer at ATFX Australia, of course.
There's another day on the clock.
Thanks so much, Nick Twidale, Chief Markets Analyst at ATFX Australia, with us here on The Trade. That does it for today's edition of The Trade. We'll catch you again tomorrow.